So Tom Lee literally just dropped a massive bombshell interview today on CNBC saying that most people will get super rich in this stock. I'm going to play the full interview right now, and then after the interview, we're going to break down everything that he said. We're going to see if we agree with it or not, and I made a huge trade that I could potentially make $100,000 on. So if you have a smaller trading account, opportunities like this don't happen all the time. I'm buying call options, I'm selling put options. I have some huge bets out there on this play. So here's the interview, and then we're going to break it all down.
Here to break down the road ahead for stocks as we head into the sometimes tumultuous month of September is Fundstrat Global Advisors co-founder, head of research, Tom Lee, joins us here at Post 9 on a summer Friday. Tom, thanks for coming in.
Great to see you.
Was it last week? Was it difficult to keep your bearings in the midst of that crazy price action?
Without question, because the market had been whipsawed by data point to data point, as you guys were recapping. You know, the jobs report raised recession fears. Big risk off. Then we got inflation this week, which was pretty tame, and I think markets suddenly went back to thinking about liquidity coming into markets. I think that the data dependence of the markets and the Fed is very tough for investors. And I think if you look ahead, I'd say we always know the summer is tough. Summer probably runs through October, but I don't think that anything's changed into year end, which should look pretty good.
But are you lower conviction now than you were 2 weeks ago?
No change in our conviction, but it is just recognizing August historically is a tough month for markets. I mean, one thing that maybe investors can be encouraged by is since 1928, the most common month for the summer low is August. And the most common week is the first week of August. So I think maybe the worst is behind us, but it doesn't mean we're straight up from here.
Right, and I guess the question is, I keep going back to, that moment in mid-July when we were at the highs. You were just shy of 5,700 on the S&P 500, and everything was a go. It was, the AI earnings path was kind of unquestioned. In addition to, general soft landing expectations, you kind of didn't have a lot of painful trade-offs to worry about in terms of policy or growth. Can we get back to something like that? I guess the idea, as you say, maybe summer lasts through October. Do you expect that we're going to have to continue to reset around these levels?
Yeah, I think if my best guess would be it's still going to be a struggle, but we're climbing the escalator again. I think Jackson Hole is going to set a positive tone on balance just because the evidence is growing. FOMC members want to be forward-looking, as you guys are pointing out. Data dependence is dangerous at turning points. And then we get the jobs report for August, which I think should reverse some of things that could be temporary. I mean, that's a guess, and if it is, then recession risk is sort of reduced. But now we have real rates are too high, and that means investors will be comfortable with cutting.
I'm thinking back to some of the notes you wrote after the last jobs number, and you looked at Hurricane Beryl and the number of companies in Texas that had no power for 2 weeks, and you do think August will be reassuring on the NFP print?
Yes. I mean, in some ways, the weekly claims is telling the story. We had a surge in claims, multi-month high that have come down since then. And so even if someone says there was no effect from the hurricane, how do you explain claims really improving so much, especially in places like Texas? And, a million homes without power for 2 weeks, how could that not affect the local economy and the jobs market?
This rebound that we've gotten from the lows of early last week, initially, certainly until yesterday, it was back to the first half winners. It was a lot of the mega cap growth stocks, and the equal weight S&P really didn't have that much of a pullback, and it's closer to its highs. But small caps definitely got a flush, and yesterday they rallied big on that retail sales number. But it seems like that's still been a complicated attempt at a rotation.
That's right. They always say bottoms are tough and bottoms are a process, and small caps are really in the process of what we think is a multi-year bottom. And so conviction is not going to be as strong as things that have been working. I think most people's toolkit is to buy the triple Q, the NASDAQ or the AI names when they want to get back in the markets. But cutting rates at a time when small caps trade at 10 times forward PE, better earnings growth, and then a visible path to easing, I would say it still makes sense that the risk reward is in small caps.
How many cuts you think we get this year?
I'm looking at consensus, which is somewhere between 4 and 5.
Before the end of the year?
Yes.
So about 100 basis points?
I think that's right, but it depends on where inflation prints the next couple months. But our base case is that we're on a glide path towards 2%. That's better than consensus. So I think 4 to 5 still makes sense.
And you've been, part of your thesis has been that elements of CPI have been falling, in your words, like a rock.
Yes.
I actually saw that phrase repeated in another desk note yesterday, so that's spreading. But are you as assured of that? And when you look at things like car insurance or some of the coincident costs of owning a vehicle, as you point out?
Yeah, I think one of the things that surprises us still is that two things are keeping inflation high on a weighted basis: shelter and auto insurance. I don't need to raise rates, so I think that's cooling, and that'll come in the second half. And for housing, rent is stabilizing, and I think housing is going to cool. It just needs to get to 3 to 4%, and then markets will be comfortable that we're back at 2. But median inflation rate is still 1%.
So Tom Lee kind of said a lot right there, but here's the thing that you need to take away. Interest rates are going to go down. He said they could go down over 1% by the end of this year. So who does that benefit the most? It doesn't benefit the large cap companies the most because they have a ton of cash on hand, so they don't really need to borrow money at these higher rates. This helps the small cap companies. The small cap companies need to borrow a bunch of money just to stay afloat. So now when rates go down, they could borrow at cheaper rates, they could expand their businesses, and they're going to be a lot more profitable. So I'm going to show you right now the trade that I went into where I think I'm going to make $100,000 on it. I could lose money on it. I can make money on it. Nothing is guaranteed, but this is the bet that I make, and I really like the bet. So just a quick recap of my account, I'm at 790,000 right now. I make videos almost every day showing you guys how my account's doing. I show you the green days, I show you the red days. July 31st of 24, I was at 803,000. 2 weeks later, I was at 659,000. I mean, I took a $140,000 hit, but what the typical person will do is they'll panic and they'll sell. So what I did was I doubled down. I bought call options. I sold put options. I post all my live trades in my Discord. The link is going to be in the description right here. And also a video on how I trade stock options for beginners and advanced people. It's all in the description right here too. But I bought that dip. I was down 140K, so I went from 659,000 to now $790,000. So that is the power of having confidence in your trades and buying the dips. So going into the trade where I actually put my money where my mouth is on these small caps, it's right here. So this right here is just a quick little snapshot of my main brokerage account. It's up a total of $238,000 of unrealized gains. I haven't realized yet. I'm trying not to realize that because I don't want to pay the taxes on it. So you can see that I have 970 shares of Triple Q straight up. I have 441 shares of EOO and 500 shares of Tesla. I think Tesla is maybe one of the next 10x stocks. I think there's a huge growth potential, and I just made a sweet video on this. I'm gonna put that video in the description below, and you can see here I sold some Tesla puts, I sold a bunch of Triple Q puts, I sold some Apple puts. So down here on IWM, so right now I'm down a little bit on these trades. I'm down $5,900 on this one, and I'm down $2,700 on this one. I'm okay with that because when I did this trade, I did it when the market was about halfway through that correction that we had a couple weeks ago. So I pulled the trigger on this one a little bit too early, but I'm okay with that because I sold the 215 put and I also bought the 220 call. Now the main thing that matters for this is I did an expiration date of 6/20 of 2025. So I almost have a year left in these trades right here for these trades to fizzle out and make money on those. But I think that there's going to be a pretty good bounce in IWM into the next couple months. So these trades don't have to go straight up right now. I think once the election passes, I think that Trump is most likely going to win the election. He's going to be all for deregulation, cutting interest rates. If Jerome Powell doesn't cut rates or signal that he's going to cut rates as much as Trump wants, I know they're supposed to be separated, the Federal Reserve and politics, but Trump will probably just put someone else in the Federal Reserve that he's confident they will cut rates because Trump wants a strong economy, and that's good for the economy. But even if Kamala wins, I still think it's going to be okay for small caps. I think the trajectory of rate cuts is still going to be there and it's still going to happen. So this is the trade that I made on IWM. If you want to see my live market alerts, live trade alerts, Discord links below, because by the time I make this video, if something breaking comes out, it takes me like an hour to record this, then 2 hours to edit it, and then I upload it, so you're probably like 3 hours behind. Discord is where everything comes in real time, earnings reports, pretty much everything that you need to know that I'm looking at, it's right there. And then every single Sunday at 9 a.m. Pacific time, I go live in there because a lot of you guys ask a lot of like option setup questions or just investing things in general. And it's a lot easier to go through all that, not texting it all out in words, but just talking to you guys about it and having conversation. So if you made it this far in a video, like, subscribe. I drop videos almost every day. I'll see you guys in the next one.